From Wall Street to the ASX, records keep getting chalked up. If you rule out the recent wobbles brought by coronavirus fears, it seems the only direction is up, fuelled by billions in fresh funds from the US Federal Reserve. Andrew Robertson reports.
More than 21,000 victims, including 400 deaths, and that's just in China. Australia's slapped a ban on Chinese tourists. The lucrative education sector has taken a big hit. It's worse than the SARS virus nearly 2 decades ago, and no one knows where it will end.
The biggest issue that the coronavirus provides to the market is uncertainty, and we all know that the stock market hates uncertainty.
China exposed stocks like airlines, casinos, miners and even A2 milk have suffered. Despite all that, after a couple of rough days, markets have resumed their upward march. Even the Chinese stock market is rising, thanks to the government in Beijing pouring more than $100 billion into the banking system.
Are you ready to look at the stock market?
Under the name Trading for Blondes, Geelong-based Kay Rees and friends have been playing the market for more than 20 years.
Often there's a strength in the market in December, people refer to as the Santa rally, and this year it's just kept on going.
Kay Rees was pleasantly surprised as that Santa rally saw the Australian market hit a record high on the 9th of January, then roar past 7,000 points on the 16th for a gain this year at one point of 7%. Driving markets all over the world, the Federal Reserve pouring around $500 billion into the US economy since last September.
From the US consumer's perspective, those interest rate cuts last year and then the Fed's movements lately have given them the indication that the Fed will basically do whatever it is required to keep the markets going.
And then there's this man. Facing re-election this year, Donald Trump used his State of the Union address to take credit for the strength of the US economy under his watch.
And my fellow Americans, the best is yet to come.
His opponents weren't impressed, but the message was clear: vote for me, which is why Mr. Trump will be doing everything in his power to ensure stock markets stay strong in 2020.
It's well flagged that President Trump uses the S&P 500 as a marker rather than the polls, and I suspect heading into this next election he's absolutely going to be very motivated.
Karen Jaritzma is tipping the Australian market to be about 7% higher by the end of the year. The US market has recovered all its coronavirus losses and is now higher than its January peak, up 12% since the Fed started its de facto QE back in September. While not quite as strong, Australia is also roaring back, which means stock markets remain overheated and the chances of a major correction are increasing. Tim Mackay is telling his clients to be cautious.
If they're balanced investors, 50% defensive, 50% growth, if they're worried about the market, then perhaps they should sort of slightly go overweight on the defensive side. Or if they're even growth investors, 70-30 or 80-20, perhaps have a slightly overweighting towards their defensive investments.
And while the big investors who drive the market may have put coronavirus behind them for now, Kay Rees isn't so sure.
Now I've sort of put the money back in the pocket, taking a little bit more time to really reassess and make sure that scare is over.
There's something else which could pour cold water on the market. It's company reporting season, and those who disappoint will see their stock price punished.